Why is P2P payment dispute resolution difficult? Imagine sending money to a friend and then realizing it went to the wrong person or got lost in transit. Resolving that kind of issue can be a real headache. That's because making peer-to-peer payments through digital banking and online services isn't as straightforward as it seems. Unlike traditional credit or debit card transactions, P2P payments lack the clear rules and protections that help settle disputes quickly. Banks and credit unions face several hurdles when trying to fix these problems. First, there are limited protections for consumers. Credit and debit cards are backed by strict regulations that allow chargebacks and fraud protections. But many P2P services don't offer the same safeguards. If someone falls for a scam or makes a mistake, the bank might not be able to reverse the transaction easily. This leaves customers vulnerable and makes dispute handling more complicated. Second, even though P2P payments look instant to users, the actual transfer of funds often takes 1 or 2 days to settle through networks like the automated clearinghouse. This delay makes it harder to catch errors early or stop a payment before it completes. If a mistake happens, resolving it isn't always quick because the settlement process is separate from the initial transfer. Third, banks and credit unions often relying on outdated back-office systems. While the front-end apps are user-friendly and quick, the behind-the-scenes processes for resolving disputes are slow and manual. This mismatch causes delays and adds to the workload for staff trying to fix problems. Another challenge is the unclear liability. P2P payments often involve third-party app providers, banks, and sometimes non-bank companies. When an issue arises, it's not always clear who is responsible. Customers might blame their bank, even if the bank isn't the direct provider of the P2P service. This confusion makes dispute resolution more complex and can harm the bank's reputation. Plus, each P2P platform has its own rules for handling disputes. Unlike credit card networks that follow uniform procedures, these systems lack standard processes. This inconsistency makes it difficult for banks to coordinate with multiple platforms and resolve issues efficiently. Customer errors are also common. People might send money to the wrong phone number or email, or fall for scams. Since many P2P services disclaim liability for user mistakes or fraud, customers often have no way to get their money back. Handling these cases can be resource-intensive for banks and credit unions, and it can damage customer trust. Finally, regulatory rules like the Electronic Fund Transfer Act, which protects consumers in electronic transactions, are tricky to apply to P2P payments. Different platforms follow different compliance standards, creating legal uncertainties that complicate dispute resolution. To sum up, resolving P2P payment disputes is tough because protections are inconsistent, transactions happen quickly but settle slowly, liability isn't always clear, and rules vary from platform to platform. Banks and credit unions need to modernize their processes, communicate clearly with customers about risks, and work closely with P2P providers to make dispute handling smoother and more reliable.